Right, feeling to launch the first time. We're live eventually now, so here we go. All right, so let's share the screens and let's get cracked on, and we'll do a bit of review from yesterday, guys, and a review from this morning. So, without further ado, let's share the screen and get going. So, share the screen, entire screen. There we go. Right, so here we are. This morning's trades, closing gap on the 4th of July, as you know, still not closed. I think Peter did quite particularly well this morning. And yeah, let's just have a quick look. I think he sent a note in on the community. So here we go. There's Peter. And I was just about to go over and talk about this trade, but we'll see that now. So Peter did really well. Went straight in at S2 and went to close the gap. So did really well. Made 1,800 quid in 2 minutes. So not bad at all. Right. So let's carry on and see where we go. All right. No problem. No problem, Paul. Where are you in the UK? Well, at the moment, I am in the UK. I'm in the northeast and northeast of England, just for a couple of weeks, and then I'll be back out to Spain. It's just a bit too cold here. Right, let's get going. So let's zoom in and show you the trade that Peter did this morning. So is a closing gap. The market came down into the 2-day low. The 2-day low was bought, stop under the swing low, and a very easy gap trade there. A few things I want to go over today, and let's what shall we do first? Let's go over and open up this other platform. I've got a lot of screens in front of me, so I'm just looking to see where we are. So pound Japani, let's go over and have a look at this pound Japani, see how we're getting on with pound Japani. Right, euro, right, okay. First things first, I just want to look at pound Japani this morning. Oh, it's about to hit full whack. So that was quite nice. So divided so that was a 2.46% trade. I think it looks like we're gonna get that. And let's just move our stop up to under the 15-minute bar. Make sure we get that. Let's just zoom in a little bit. We'll get into the trade in just in a minute. I want to finish these trades off, although maybe we should take that profit and be happy with 27 pips. That's still over 2%, 2.1%, and then we can get on with things. Yep, I'm going to take that profit, 2.1% on that. This was a support and resistance trade. So we've got the just a recap. 4 hour. We're all making all-time highs all the time with the pound Japani. 4 hour 200 EMA. So the market is positive. We have started to put in again a series of higher lows and higher highs. And what we're doing is just going for that little squeeze up here. And we might get the opportunity again while we're here to come in and, well, before I go into that, what we did was just come down to a walk in the dog trade, coming down, put in an order in at a nice round number with a stop under the swing low, 13 pip stop, and going for a double tap on the top, or should I say just a precursor tap here, and take some money. We're completely overcooked on the stotch. The good thing is here, if we look at this, I'll pull this up so you can actually see. Oops, what have I gone and done? Right, there we go. bring this up. OBV, on balance volume, or I call it my OBV9 indicator. I'm going to code this into a hard indicator now. This is one of the most underrated indicators there is in the marketplace. No one uses it. No one talks about it. It is a forward-looking indicator, on balance volume. I'm going to do a video on it this afternoon. On balance volume on its own is not really particularly of interest in too much, but as soon as you put it with a baseline in which to measure it from, the market then comes alive. As you can see, if I put this down here, on balance volume has said the market is going to rise. The OBV went up. What happened? Market rose and went straight up. It is one of the most powerful indicators you will ever find, and it's one of the only leading indicators there is in the market, and I think we're the only trading room that use it. So what I'm going to do, I'm going to do a video on that for the guys that are online at the moment that are in my room. I'm going to release the paper this afternoon, so you can all have a look and look at the advantages, disadvantages. Then I'm going to do a video, and then we're going to post the video, and everyone can then see. Everyone who is a trader, wants to be a successful trader, absolutely must know what on balance volume is if they want to find out what's going to happen before the candles fully formulate. On balance volume is what you need to use. Right, I'll stop prattling on. Let's get down into this. Have a look at this. We'll move this down into 5 minutes and just have a look where the volume is actually going. But kind of still okay. My market is still going up. Do I want to take this? I'll tell you what, rather than waffle, we'll take a couple of percent out of the market there, because I want, and I'm going to put an alert into the tops here for the market to come up again. And what we're going to do, what shall we do? We will put an alert down into the stock, down into the bottom here. For day trading on the FX market, I use a stochastic marked at 8 days, smooth by 3. It's a really good setting on the stock for doing day trading, and it identifies very well pullbacks. You know, all these pullbacks, not exactly fantastic on their own. Like any indication, you need to use a bit of intelligence around it to understand when is the time to get in and when is the time not to get in. If you go into 15 minutes, we use it quite a lot in the room. You can see here, 15-minute bar. There was a hesitation there. There was no trade there on the 15-minute bar. There was an indecision bar, but we took a support resistance trade a little bit lower than this. But there's an indecision bar. This is the first big 15-minute bar, but we're coming into some resistance here. What I want to do is, let's just go and have a look at Euro. Where's my phone gone? I can hear a noise and I'm sat on the phone. I thought, what the heck is that? Right. Sorry. Let's go and have, before we go and search a few filters, let's just go and have a view. Whoa, right, okay. We have a setup. Right, let's just take things in perspective. This is we've had this target. I've got this target for the rest of the week. However, don't forget, you do not stay in the market when there's economic news, and we've got the economic news on Thursday, so we really could do with getting this trade over and done with by Thursday. Got the market pulling back a little bit on the stock on the 4-hour. The 200 EMA is telling us that this is long. I think a few people in the room may well have seen, I don't know if you have seen the 15-minute bar, 15 minutes of magic, as I called it. This is what we're going to do here. This is what we're going to use here. So we're going to zoom out and have a look at the 1 hour. You can see the market's come back and it's dropped back right into the bottom of previous price action that has hesitated before. So be quite interested now. We did have a buy off. Some people made 1%, some people made a little bit more. What I did in the room was yesterday we moved our stop under the previous swing low on the 1 hour, and the original stop for people who kept the stop in is here under that swing low. And if people have done that, then you are obviously still in the trade, but we're out of that trade now. And I want to be able to see if we can get in it again. And would like to just look at this resistance here and here. We've kind of got to a nice part where the market has resisted before breaking through. Then we've got support levels and more support levels here. So we've got the 200 EMA on the 1 hour and the 4 hour with us. Not quite on the 15. But what we do have is we have a nice Ikenashi flat bottom candle. And especially the Ikenashi candles, when you do get a flat bottom on a candle and it closes above the 9 EMA, this blue here is the 9 EMA. Just going to turn that one off. That is a very, really, really nice candle. They don't always work. It's like everything. It's trading. If we won every single time, it would be called winning, not trading. But we just win most of the time. So what we're going to look here, what I'm going to look to do here is we're going to measure this 15-minute bar. We're going to look for a break. And what I want to do on here is we kind of want a break on the spread. So we're at 10,824.2. I think 10.85 will probably give us enough break on here. The stop at the moment is 9.8 pips. We always round it down to 10 plus the spread plus 1. So we're kind of looking at 12. Now what I'm looking at here is a previous swing low, which was here. So 12 is going to be kind of nice. Where is the next resistance? Oh, we've got an easy run up here, 12 and 18. Could be quite nice. That would give us a 1.5% profit. So we're going to set 12 here, and we're going to have a target of 18. And we're going to have that break at 25. At 25. So what we're looking for is the market to break this Ikenashi candle with the spread, and then we will get back in to this market. Hopefully we've got much bigger targets to go for, much bigger targets. But I think if we can squeeze out a cheeky 1.5% out of that, we've already traded the FTSE, got a little bit of money out of that, got 2% out of pound Japani as well. So that's good. Monday we took 4% out of the market. We lost 0.25% on Wednesday. Then yesterday, I've not done the calculations yet, but we're probably, I'm not sure what the room is of, but I think we made somewhere between 3.7 and 4.2. I need to check exactly on the history on what happened, but we're about 7-8% up for the week. So that's not so bad. The other trade I wanted to have a look at, it's on a pullback at the moment, which is Aussie USD. I'm interested in Aussie USD. Kind of interested in gold as well, but that's on a bit of a pullback at the moment with gold. We'll come and have a look at that in a minute. So the other trade I stuck in the room this morning, we can have a little review of, if it's triggered yet, is USD Swissy. So USD Swissy has now kicked in. So USD Swiss, let's go up to the 4 hour. The market pulled up. These are previous trades that we've done. That was the tool. Did a video yesterday on how to make this tool, which is a 1-to-1. And if you get a bit sporty with it, you can make it a 1-to-2, 1-to-3, etc. It's pretty good. Very, very nice tool. Right, so what we're looking at here, we had the market negative, and we've just put our nose above the 200 EMA. We are exhausted on the stock. We're completely overbought on the stock. So I was looking for a way to get involved in this with nearly a 3% trade. So I had a look at this morning. I think I did post this morning, I think. Let's just have a look at the Slack room. Slack room. Trades. USD Swiss, yes. So that's where we were. That was what time was that? That's a couple of hours ago. Right. Put that back. Right, let's get on. And what we're looking at here, if I get into the details so you can see this, it's, you know, we're day traders, so we use different tools for different scenarios. There was some of that we could do for you. We could have done a 1 hour stop and reverse. That's a setup. That is a major candle. That is a setup candle, and that is a confirmation of a fractal, and it would be a direct break if for a reverse. A SAR, stop and reverse break. There is another stop and reverse here as well. So that was trading that on a 1 hour scenario. Coming down into a 15-minute scenario, I was looking at taking the fractal break. So what we're looking at here is, as always, we never take the first fractal break on a reversal. We always take the second fractal break, and the second fractal break was set here. You can see the market triggered here, and because I come late to the party, I was going to wait for the stop and reverse, but then looked at the market structure with the fractals here. And the thing that caught my eye is we've got the Fibonacci flat top bars coming down. On this occasion, we closed under the 9 EMA, which is a really good sign for a reversal, resulting in the first fractal break here. So when I come to the market this morning round about here, I spotted that second fractal. We were in a little bit of a pullback because we've got the stop and reverse signal here. Then I didn't expect that to be broken at all. So what we did is put an order in for that fractal break, as you spotted a few hours ago, and we put the stop above the swing high, and then we were looking to get involved in the USD Swiss on its way down. At the moment, it's moving in our favor. So we're in the USD Swiss now. We are. Let's go and have what should we do? So we're in Aussie USD as well. I put that signal out this morning as well. Let's zoom right out. So we've got this market. It was actually running into this 4-hour channel quite nicely, and with this market running up, I had a prediction level of 68.27 with a first target of 67.96, and that was predicated on the market staying in the channel. But like the Euro US, the Aussie US, we've kind of gone sideways at the moment, and we just need to get out of that. The thing on the 4-hour, we're trading above the 200 EMA, which is really, really good. Always remember the 200 EMA is your friend as a day trader. And what we're looking for here, the market has moved back in. You can't really call this a bit of a consolidation, but we've got 3 peaks here that have stopped before an indecision candle was put here. and we're now going sideways. So let's get into the detail, because there's nothing really here to see at 4 hours to trade. So let's get into the detail. Right, obviously some that I wrote earlier before, well, this morning, kind of looking at the micro levels, because it's important at the micro levels for day trading to understand what is going on. We were getting a series of lower highs, but we've just put our nose just above here, and it kind of looked like it was going to get going, and that's at the 1 hour level. Now if we move back into a 15-minute level, you can see some previous trades that we've done. Let's get rid of those previous one-to-ones that have worked. Now on here, I was looking to see where we were, and one of the things we were not banking on as such, but the market has provided a nice 9 crossing the 200 EMA, which is quite nice. It comes late to the party. We do like a pullback, and as you can see here, there we've got Ignashi candle. Although, you know, we don't have lots of names: doji, spinning tops, 3 soldiers, 3 crows, all that malarkey on normal candles. There's only 3 states for an Ignashi candle. That is, it's either going long, it's going short, or it's indecisive. And this really is kind of an indecisive candle. However, it closed above the 9 EMA, which give me indication that this is going to be, if it does break, it's probably going to break to the top. And if it does break to the top, it would need to break out of this descending 1 hour resistance level. So we took a break on the 15-minute bar, and looking at the structure, this spike down, what I wanted to do is to have the stop under the previous fractal structures here that held. If I draw these in, it might show a bit better on the screen. As always, 1, 2, 3 pins for support, and the market came down and looks like it's bouncing off that support. If for those people that aren't in my trading community but are on live here, then we can wait another 6 minutes and show you how to get into the 15-minute bar live. We're already in it. Our stop is under the previous fractal, very tight stop. It's only 8 pips, 9 pips, and we're going for a 17 pip target, which should be nice and easy to do, just under 2% trade. But we'll have to see how the market reacts. We are going sideways just at the moment, so we do need this to break out to work. But you know, this would be a nice 15-minute bar if we could do it. If that would be the perfect storm 15-minute bar, because we're closing above the 9 EMA, we're above the 200 EMA, and we've come off some resistance. That would be perfect. Whether that worked, and I didn't take that. I'm not going to tell you I did. That's hindsight trading. We don't do hindsight trading. So that would have been a nice little trade, and it's a shame I wasn't on it. I was doing something else, and 45 minutes to full 1%. Never mind. This is the second bus that pulled back. What we're looking for is a phase wave. So it's a wave 1, 2, and a 1 that failed on this oblique, and now we're coming back down again. So markets, as you know, or maybe not know, I'm not sure, markets only run in 2 directions. Either go up or they go down. They don't do anything else, but they do run in waves or phases. So on a bull market, you'll get a wave 1 with a little pullback, and then you get a wave 2 followed by another wave 1 followed by another wave 2, and so on and so forth. These are all different waves. or phases. So I often refer to them as phases or waves. And we can measure those quite nicely, and we can use Fibonacci expansion tools to predict exactly where the phase wave is going to finish and how to identify profit takes as well. But I do digress. So let's have a little look at, go and have a little look at gold. And then we'll use some of these screeners, which is, these are all the AI tools that identify all the trades for us, so we don't have to. And we'll see where we go with that. While I forget, remember, boom, there we go. There was the euro odd target, so quite nice. That hit. I mentioned this, I put it in the room this morning, our fractal bot community, where, oh my god, there it is, there we are. So there's the trade there. It's an automatic robot, and we were going for, the robot was going for a 1-to-1 trade. There it is there, with a target 160987, and boom, straight in there. Obviously it didn't go that, obviously the target went higher than that. Right, so far we are up a couple of percent on that. As people know, we did a review of this. This was last month's fractal bots that made 15.23% last month, and the best bots were working on the FTSE, DAX and Euro USD. 100% hit rate on that, and again 100% hit rate at the moment. So really good for those fracker tools. I don't know if Eja's on in here. Is Eja on? Are you on, Eja? I can't see people who are on, you see. I'll send you the code to go and get these fractal bots. And yeah, so right, there he is. Yes, look forward to it. You're right, okay, there it is. Yeah, so those fractal bots are, where are we? Website tools, and I'll go, is it right, there we go. I've not advertised them yet, they're on the website, just my trading community to get these full instructions now to use. And it's now not 17 bots, it's now 21 bots. And yeah, at the moment we're in at 15% a month, expecting that to be the same and more. So we're kind of looking at somewhere between 200-250% a year return on just using robots. But anyway, I do digress. Let's get cracked on into the manual trading, and let's go and have a look at gold. Right. So as you know, we've whacked our target on gold so far. We've got target 2 up there. You won't be able to hear that because I've got a suppressor on the mic, but we've got some alerts to say go and have a look. Pound Japani, right, okay, we'll probably need to go and have a look at Pound Japani. In my haste, we took 2%. It's obviously made more now. It's gone right up and smacked the original target. But while I'm doing this, running through multiple charts all the time, it's a bit more entertaining. You're looking at lots of charts rather than sit watching at one. And especially, it's okay in my trading community, but when we're on YouTube, I know people's attention span is very short, and they end up grazing. Only the serious kind of traders stick around. So I'm trying to go through, give people a flavour of what we do every day. So 4 hours, we're still positive. Quite interesting, actually. This is a guy off YouTube. I did the 15-minute bar. As always, you get the odd sniper. You try and give people something for free, and you get the odd sniper that just doesn't doesn't understand or likes to put some rhetoric out. It sounds like it's quite nice actually. The guy yesterday he said I use a 15-minute bar or lost many trades, so which is not correct, of course. There's the first 15-minute bar and the market moved 0.5% in the favour before falling away. So you would either have done, well, no, you would not have done a stop to entry or break even. That one actually would have lost. No two ways about that. There wasn't many trades. There's another 15-minute bar that never triggered, and then there's the other 15-minute bar that did trigger, and obviously hit full target. In fact, in my haste to go and have a look, when I get these comments, you think, nah, that wasn't many trades at all, otherwise we would have took them. So yeah, it didn't quite do it. We lost one and won one. So again, there's a reason it's called trading and not winning, is because it's trading. You can't win all the time, every single day. What you can do is win every single week, and we have for 5 years. We never lost a week in 5 years. We lost the odd days, but never lost a week. So let's have a look at this. So just an illustration of these. Right now, I bat on my room about this. So while we're live, I'm going to bat on about this here as well. It's very important, especially Icon-Asher candles, because it makes things so clear. The way markets actually move, and I mentioned that the markets move in phases or waves. And when they're going to a consolidation phase, nearly every single time they do what I'm about to show you. So we're in a 4-hour. You can see here we've got a wave 1, pulsive wave 1, wave 2, very small 1, 2, and then a large 1, 2, and then a 1 and a 2 pullback, and that will then change if this bottom is broken. So roughly here, if this breaks, then we're going to go into a reversal pattern, and we will probably see the market before even going against the 4-hour. We'll probably see the market trying to come down to 2300 again. However, I'll go back to what I was going to show you. So just get rid of that. And this is a really good tip. It happens 9 times out of 10. If the market runs up into a consolidation phase like this, it nearly always exits in the direction that it entered it. So you get a consolidation phase like so, market like so going sideways. Market runs up into a consolidation, and nearly in every case, it then continues in its same direction, regardless of, let's skip, what have I done? Regardless of the trend. The market moves down, consolidation phase, moves back around. Remember that, and that works at every single level in the market. It's just something that the markets generally do, obviously based on the way, the emotions of traders and people in the market. They're looking for the market to go up and it goes sideways. So your emotions immediately, well, I want to go long again, or we're going short. This is a pullback, I'm going to short it again. But take a note of that. It's a pattern that you see time and time again. We've got a little pattern here as well. When you spot these and you think, well, where's the market going to run now? Well, the market came up, went sideways, and it ran to the top. Now this one, we've gone enough impulsive bars at 4 hours yet, but if these continue just chattering away here, and there's no reason why they won't, because if you look at the on-balance volume, we are under the 9 EMA, which means on balance the volume is down, regardless of the bulls trying to buy from this consolidation area. On balance, the volume is down, so it would take a brave man to want to go long in this. This is at 15 minutes. So we're looking at the impulsive moves at 15 minutes, which is supporting the 4-hour market coming down. We are under the 9 EMA. So from a price action perspective, the market's down. From a trend perspective, the market is up. So you've got some conflicting signals in the marketplace at the moment. So let's see if we can make sense of this, because having a quick look at this, you know, this move up absolutely failed. And if I'm looking at this candle, the only thing I'd want to be able to do is to put a stop above here and trade back down to this next consolidation phase. But we don't really do too much swing trading. So let's get down into the detail. Right, we're down into the detail now. Again, there I can spot that consolidation run there. Market moved up, went sideways, and lo and behold, it blew out to the top. Always keep an eye on these things. There's another one. Gives you some really good insights into price action, market movement. Right. So, Paul, I think the 15-minute bar works on all time frames. Well, interesting you should say that. The 15-minute bar that I posted on YouTube is the very basic 15-minute bar. There's a lot more to the 15-minute bar, and you can make it work on you can make the 15-minute bar work on many different things, many different time frames. It all depends on how it relates to the 9 EMA, the 200 EMA, and price action. And there are extra layers of sophistication that we use in my trading room. What I try to do is put some out on YouTube that would help people and give them an idea, provoke the thinking, and give them a real base strategy that we know that works. And then you can make it your own. But whatever you do, I don't want to listen to people that say, "Oh, it works on candles." Well, it can work on diddly squats, bars, anything. Not interested. We do Ikenashi trading in this room because it has been proven over time to be far, far better than using candles, which makes a lot of people cringe, because once you get your little cuddle on your candle and your comfort zone, it's hard to move away to something new. Same as if I then say, right, we're going to use unbalanced volume now, and people are going to shriek and say, what the heck is unbalanced volume? Unbalanced volume's no good on its own unless it's got something to measure from. And that is, Ikenashi candles with a 9 EMA, an OBV9. Well, you got an ATM if you know how to use it. And you just got to be patient, absolutely patient. I'm doing another video as well. There's 5 points of trading. You have a strategy that you believe in, something that you hold to be true. So once you have your strategy that you've tested, and it's been proven, and it works, that's your strategy. Or there's two, whichever. You only need a couple of strategies and a few assets. You don't need anything else to make a living. So you've got your strategy. The next thing, you need to have your discipline. And you can't just go firing off on all cylinders and applying a strategy everywhere. You've got to have the assets that you're going to trade it on, and you've got to be able to wait for the strategy to set up, a confirmation of an entry. Then you've got to be consistent in applying that, absolutely consistent applying that. And then the other thing, which is the big one, being patient. You've got to learn to sit on your hands and wait for the trade. This is where the discipline and being consistent comes in, and with your patience. You've got to just to be able to sit down and be patient. Now, if you go on my website, there is a free document there, Emotion Intelligence, and it goes through all the different emotions and the things that, the the constituent parts, I think, that make a reasonable trader. And that's what I do every day. Once you've got your patience in place, then you've got to have the passion to be able to do it. You've got to have that killer instinct. You know, you've got to get up in the morning every day, want to trade, be excited about trading, but you've got to have these disciplines. You've got to be strategy, your discipline, you've got to be consistent, you've got to be patient, and you've got to have that passion and press that button. And if you've got all those things in play, you'll make a really potential good trader. Head and shoulders pattern here, guys, as you can spot here. A very weak one, of course, but there's a bit of a crumbly head and shoulders pattern there. Right, I do waffle on a bit, so I will... I'm just passionate about trading and keen that, you know, happy to share the knowledge and help people as far as I can, because there are so many people that get fed, as Trump would say, fake news, and you know, a lot of traders cherry picking trades and not showing you the warts and all on what a real trading room is like, a live trading room, not a, you know, after the fact trading room. So let's get in. There's nothing on the 15-minute bar. You can see here we're on 15 minutes on OBV, and we're coming up to a neutral zone at the moment, with on balance the market is more positive than it is negative. Well, it's about equal at the moment. You can see on the stocks, and by the way, the stock settings are on a 15-day smooth by 5 on the stock. The gold is a slower beast, but it is a breakaway beast at the same time as well. So you've got to be careful of that. And you can see that, you know, from a personality, every asset's got a personality, and you can see here with the stock has come all the way up to the 50th percentile and hardly moved. That tells me there's not a lot of bulls in the market that want to give this a trade. So really, when the market came down to a stop here, it came up to some resistance here. So do I want to trade this 15-minute bar long? Absolutely not. I would want confirmation today. I would want to be trading above the 200 EMA on the 15-minute. And I would like to break out this structure, because at the moment, you know, the key thing with market structure and trading is you can go up to your 4-hour levels, your weekly, and everything you want. But if you're going to be trading at 15 minutes, you need to be able to read the 15 minutes as well. And the 15-minute, always keep an eye on the price action. Look at this. Higher, lower highs all the way. We've had the market drop off and then a bit of a retrace back, and we can check that retrace, see if it's done a 50% retrace or a 61. You can really tell if the Fibbo boys have been trading. So they are 61.8%. So that's the Fibbo boys driving this up, taking the cash. There's another thing. We're doing some live trading on how to use Fibonacci's correctly. Fibonacci retraces and Fibonacci expansions as well. So that's something to look forward to in the room. So what we want to be able to see here is a break of this structure before we want to go along, because at the moment we don't know whether that this is only going to put in a lower high. We don't know that yet. I've got a clue. This is where we have got to have the discipline and the patience to wait. The market is always right, regardless what you think and feel. The market's always right, and it's hard sometimes when you get your trade wrong, because the market is always right. So you've got to learn to read, watch what the market's doing, look at the patterns that are coming on. You could get a breakout here, but it's a bit early. That is a structural break that I would look for today if I was trading. If I was trading this live, the other thing that I would be interested would be is if we come up to the 1 hour. We come to this level, we can see it's quite a key level actually. It's been quite a key level. in the past few days. That if the market comes up here quite slowly and then starts to reverse at the 1 hour, and what we're doing here is just technicals, not fundamentals, technicals. Fundamentally, you'd expect gold to be going up because of unrest in the Middle East, because of interest rates potentially coming down, and we will get a good feel at the end of the week with what's happening in America and whether that happens or not. But until then, the larger market should be supporting gold for going long, but the technicals don't support that at all. The technicals are suggesting that this market might roll off. Now, if the market meanders up here quite slowly and does not break this level, this would be an ideal position to short from. You put a short in there, and you put your stop above the previous swing high, so 2380 level, and you would then come down to target. First target would be this consolidation area here, or you can use an expansion tool, and it's not done yet, but you can use a rudimentary view on, whoops, best if I get this correct. There's the expansion tool. We'll use the expansion tool there. If it is a double tap reversal, then we'd be expecting that phase wave to come down to 2327, or at least you'd want to be coming into the 78% fib or coming down. If that happens, that's one thing to watch out for, guys. There's nothing to trade and nothing to see here until this level is broken or double tapped. If it's broken out of, then we're going to head for 2385. If it's not broken and we get a double tap here, then we'll be coming down into these levels here. Let's go back and have a little look at the FTSE and see what's happening with that FTSE. Right, absolutely nothing. Going sideways after the gap was closed. Let's have a look at crude, because crude does drive the FTSE, drives the market, especially with BP today putting in some pretty poor figures. So we're expecting crude to come off into the 4 hour. It's still a bullish market. We've broken out of the 4 hour channel, as you can see. This is other trades we've done on breakaways. That's target 3. We've already hit full target 3, and the market is now falling away. I've put some. You can see the on-balance volume is down, and we'll probably. I'm going to put some alerts coming down to the bottom, down into the bottom here. Give me a heads up at 80.84. We're completely overcooked on the stock. Stock is set the same for the indices as gold, as crude at 15.5. So yeah, let's just have a little look there. Right. So let's what time is it now? We've been going a few minutes. Let's get the fall filter. All right, let's a quick look here. We've got the breakout of the 15-minute bar here, and followed by indecision candle, another flat bottom, another flat bottom. One thing to mention is, and this is a good example actually, this candle here is a 15-minute flat bottom, like 15-minute flat top there. They rarely, although they do, come in ones. They always usually come in pairs. More often than not, they're in pairs. And when they do come in pairs, and you see a flat bottom, it's a really good indication that we're going to get a follow through. Now, we do have a trade two different trades. We have a 15-minute followed by a 1-min frac, and then we have a 15-minute and 5-min combo that we use a 15-minute bar to identify a move in the direction, and then we use a 5-minute fracking tool to muller and hammer the market. And yeah, it works quite well. We make something between every time it happens. Some days we have a reasonable day on it. We can make somewhere between 1% and 7%, or more likely 1% to 3%, something like that on the trade. But it's good. So Euro USD. Let's see where we are with the other assets we've got there. USD Swissy, wasn't it? That was the other one that we were trading, and that's slowly trundling down on its way. Aussie US, just an Aussie USD, Euro USD. Euro USD, we're looking to go long with that, and that was a 15-minute bar, and we're still waiting. Still waiting. Right, so on balance volumes are looking good. As long as it's staying above the 9 EMA, then that's a really good sign. So what we're going to do here, we're going to we've got no robots working at the moment. There's nothing to look at the moment. These are search engines that run the market and tell me when to throw one of our robot tools on. There's a short, and we've got an indie bot, which tells us is the market setting up so we can throw a robot at it. So here it's the bot and AG, which means it's an aggressive bot, and it's telling us Aussie USD is ready. So if these are 15-minute indie bots, so it's already telling us that it's ready to trade. So I did say, I've reminded myself, this is a 15-minute bar indecision. If you want to take this trade, does anybody want to take this trade live? I'm quite happy to set it up. If no one makes any comments, then we won't bother. But if people want me to set this trade up, then we can set the trade up and trade it. So no one's bothered. So 15-minute bar, got 6 minutes to go before it formulates. This is an indecision bar. Some of the times that you wouldn't want to trade an indecision bar, it's more likely to break to the top than the bottom, especially if it closes above the 9 EMA and the 200 EMA. It's probably okay to go. But when you get a rejection, which is the wick, that is larger than a body. All right, someone is interested, so we will set this on. So when the wick is larger than the body, then that's your warning sign that things not be are not all as you imagine. Let's have a quick look at the on-balance volume. You can see we've got the on-balance volume starting to go up, which is our forward leading indicator, and the average true range is coming down because the bulls haven't really spotted this yet, and then when the average true range starts to come up, you will see that the bars get larger, and just because the bar's going up, that means the average true range is increasing. Not that the market's going up, it's that the volatility in the market is moving higher. So when the volatility in market's moving higher, you often see larger volume candles. In other words, longer candles. There are more bears in the market. So if I put this here, you can see that illustrates on this candle here. There. And as the volume goes up, you can see the next candle, so on and so forth. The markets, the more and more bears are coming into the market. So by using your BV9 and average true range set at 5 periods, gives you some really good, oh god, sorry, For people in my room to know what that is, that's the BBO trade getting ready to set up. I haven't. We have system trades every single day. When those system trades happen, then we kind of have a plan of attack every single day. I'll just show you. I have a trading plan published every day, every morning, and we'll put this on. I'll show you on here every morning. Trading plan, and we have a trading plan that publish every single morning. Where is it? On what we're going to do, the trades that we're going to take, what we're going to look at, and when's that? Was a time that was? You used to have a date stamp on here. At 6 o'clock in the morning, identify what's going to happen in the market, and we do it every morning. So there's one there. This is what's going to happen. These are all the trades that I think we're going to take. This is the trades that we were doing, stacking trades here, moving stop to entries, as you can see there, putting signals in for people when we track the market. At the end of the day, did we win, did we lose? And that particular day we made 4.48%, quite nice. And this is what we're trading with gold, and there's another one here in the mornings. This fast forward, and this is where we are here. This is this one, and these are the trades that are ongoing. So we put signals in from 5:30 to 7:45, then we go live at 8 o'clock till roughly 9:30, and then we have a system trade. Happens every single day, takes 5 minutes to set up only, happens every day, and we call that the BBO. And then we've got the trade, it's a system trade, happens every single day between 12 and 1. And then we always go for the Dow gap in the afternoon, like we're live trading this afternoon, of course. We go for the US 500 Dow gap yesterday was an absolute stormer, 120 pips, absolutely fantastic trade on the Dow yesterday. Very high probability trade, works very, very well. And then we've got the BBO again on the NASDAQ. So we can see there's 1, 2, 3, 4 system trades. Yeah, so that's 20 trades a week minimum that we do. Minimum. Anyway, I'll take that to one side and put that up there, out the way. There we go. Right. So we've got 1 minute left. So that's good enough now. We can start measuring this trade. So it looks like it's going to be the same here on a double tap reversal. So we want to be setting it. We're looking at 76.40. I think on here would be good, and we need to be under that swing low, which is that's a very tight trade. That's 4 round up to 5 plus a spread 7 pips. That is, or if you're using old school MT stuff, 70 pips. And we could just go for a one-to-one risk reward. We can have a quick look, see if that will work. Use our tool. One-to-one risk reward, very nicely indeed. It looks like it would, without getting a double tap in here, or you could make some nice money there. So let's get that trade on. $7.7, and that trade should work. That should be a quite nice little trade, and that would be the trade itself, the risk reward. Break out of there one-to-one before we come into this resistance top here. So that should be nice. Be interesting. Get some feedback, because this trade will take a little bit more than time we've got available for the live trading, but please do provide some feedback. I obviously know the trade, and it's I'll know whether it wins or loses or not, and if you take it, great. EJ, no problem. See you later, EJ. So the target for the Aussie USD is 6747. 6747 is the target. So I can just put that in. Odd USD target is 6,747. There we go. Can I be confident it's moving sideways? Well, if it does move sideways, it's going to make full profit anyway, because we're going to the top of the potential consolidation area. So what we're trying to do is do I call it a sneaky beat. Let's just try and just squeeze in a cheeky 1% and just look at the market action, and let's see if we can make some money out of market action. It's all about learning how to exploit the market to your advantage by using some of the tools and techniques that we've got. Now, they don't work every time. Don't believe anyone that tells you these things work 99% of the time or they make millions of money, because they're just liars. I'm sorry, it's probably not the right thing to say on YouTube, but don't believe anyone that claims to win all the time. It's just not reality. That's why they call it trading and not winning. You've just got to have a bag of tools, bag of strategies, a couple of three strategies, some assets that you want to learn and get used to the personality, because every asset class moves slightly differently, and then just apply your craft on it. It's as simple as that. There is no holy grail. They are just strategies that work, and that either works or doesn't work, with regard to being disciplined, consistent, and patient. That's what it's all about. So let's have a quick look. Let's use some of these screeners, and let's have a little look at. I'll tell you what. You start here. Dip along. So this is how fast it finds them. So what this screener is telling me here, it's gone away and found CAD Swiss, and what it's saying is this market's long, and we've had a dip insofar as we're completely overcooked on the stock here. I just got to prove that the market is long. As day traders, we use the 200 EMA on the 4 hour, and the market has gone long. It's on a pullback. At the moment, we do not know yet. The market's always right. We do not know yet that this is not just this could be just a phase 2, and the market could be going off, or the market could be crossing back under, like so. We've had the market peaking up. We don't know the market's going to not cross through the 200 EMA again. However, we have got the market sprung loaded on the 1 hour. In other words, it's pulled right back, ready. It looks like it's into this little consolidation area. You need at least a couple of pips to identify some sort of consolidation. But again, I'll just keep drawing it in. So drawing these things in, and it gets a bit boring, but you've got to drill these things in. They are. There's the market coming down, consolidation, break, consolidation, break, market come up. It's not really a consolidation, but tried to break to the downside. Market came up, had a little box, and broke out to the top side. You've got to, at every single level, watch out for all these little things. They're not tricks, they're just the rules of a pro trader. On balance volume on the 15-minute, pretty well down, and it really broke here. So that's when the volume really broke off here. So that gives you the opportunity quite easily to do a fractal break and come down with it, because it told you before it actually started to really roll off at that very squat candle, before these big candles come in, it already identified where the market was going to run on balance volume. So what can we do here? Well, the market, well, what are we going to do here? We don't know yet, do we? We're completely overcooked. So it's we haven't got that much time left. So what we're going to do, I think we'll walk on by that. We're going to have a look for really some perfect storm setups if we can. Oh, that's looking nice. NZUSD, that is looking quite nice. Let's just have a little look on the Richter scale. So at the moment, the Kiwi is at 1.29 and the US dollar is at 5. So obviously coming down. On balance, volume is pretty flat. There is some people trying to buy, as you can see here. We're into this consolidation area here. The market is bullish. As you can see, the market's turned bullish. We're completely overcooked as well. Oversold on the 4 hour. We're oversold on the 1 hour. So we're kind of spring loaded, really ready for a trade. Now for people that are here, that are in my room, how long have I been trading? 20 something years. About 24 years, something like that. Right. We have got something here that is a warning. I kept mentioning before on the 15-minute here. Look at this. We have got potential downward channel in here. Yes, we have. We've got a series of low highs and lower lows. What we have got is dropped into a consolidation level. So we will be going at risk doing a 15-minute bar against this descending structure. Now, the thing that would make me want to take a trade under this oblique resistance line, we know on a 4 hour it's bullish, but I want, as I keep calling it in my room, you want the force with you if you're going to come from a low point and reversal. And the force is always a 200 EMA at every single level. The price action is always on the 9 EMA. I'm doing a video on the 9 EMA as well. Is whatever you do, never ever trade against the 9 EMA. That's a sure way of losing your money. 9 EMA is always right. If you don't believe me, try and trade against it and come back with empty pockets. Right. So I want to put an alert here, I think. I want to put an alert on this oblique resistance. You can see there's a bell there. So we've got an alert in case the market breaks out. And yeah, never mind. So let's have a quick look. Is there a dippy short? No. I'll tell you what we haven't done for a while. Have I got it set up? It's on the Spanish setup. I don't know whether we've got the 4 filters set up on here. No, we haven't. It's all over the place at the moment, so we won't bother with the 4 filters setup. It's on a 3-screen scenario, so we won't use a 4 filter setup. We'll just go back onto the standard one. And let's have a look. We'll use a 3 filter, looking at 15. I'll show you what they are. It might help people a little bit. So there's a 3 filter. So it's a free 3 filter setup. And I don't hide any code because I want people to learn to trade, not be dependent on me. So if I can teach people to fish for themselves, that's perfect. So what this is doing, it's there's a dead simple bit of code there. It looks at the 1 hour time frame and looks for the market closing under the 200 EMA. It then drops down into a key combination that we have on the 1 hour is a 926 cross. That's a trade that we do. Once we got that confirmation on the 1 hour, we drop down to 15 minutes to make sure the market is under the 200 EMA, and we'll make sure the 926 has done that confirmation as well. And then we get all the way down into 5 minutes and we get the 926 here. So what you really have is nearly a perfect storm trade. And at the moment it's coming up with Bitcoin at the moment. They're shorting Bitcoin. So, well, as you can see, we're shorting Bitcoin anyway at the moment. But pound odd, this is now telling us from a 1 hour perspective, this is scalping, of course, that this market is getting ready to be able to trade short. Well, looking at that structure, you wouldn't touch it with a barge pole, really, would you? The reason you wouldn't touch it is you've got quite a lot of indecision in the market. High test, long test legs. Stay away from action like that. It's a sure way of you giving money back to the market. We'll try the opposite in longs. Oh, there's quite a few bits here on longs. So we've got US 500. It's in the futures market at the moment. But yeah, it's on a pullback. Here we are, CAD Japan. We've already traded CAD Japan. And we were trading it into a front run. If you remember, when we first come on, made just over 2%. That double tap resistance that we'd said that would probably happen, and it has happened. And what this is now is saying is there is a potential for carrying on going long. Well, we know that because we were wanting this breakout. Now, it is not perfect by any stroke of the imagination because that fractal break is right on a double tap resistance. So if you want to trade pound Japan, it is definitely long. But it's definitely long only on the breakout of that resistance level here. A 5-minute fractal above that will get you long and get you on your way. What else? Euro Japan. Let's have a look. I saw it's Aussie Japan. Sorry, it must have flicked up and down the list. Oh, that's again, look at all those legs. These are the things you need to look out for. When you're trading Aikanashi, you haven't got all that problem with let's get the old school candles on. All these, all these candles when you're saying, oh yeah, we've got an engulfing candle there, we've got all sorts of different candles there, another engulfer there. Market's going to go up, oh no, dark shadow here, oh no it's not, oh yeah, it's a engulfer here. It's going to all over the flipping place. Doji's shooting stars, reverse hammers, all this sort of stuff. You don't need to be bothered with all that. You need Aikanashi. And what the Aikanashi candles are telling you, you can see that when it's green, the markets are, the projection is that the market is, the movement, I was going to say motivation there, the momentum is certainly up, and the reason the momentum is up, not only because of the candle, it's because of that 9 EMA. So long as the markets are closing above the 9 EMA, wicks don't count, the force is with you. As soon as you start breaking under that, the force is against you. So this is looking long, but at the moment, the price action is saying absolutely not. On balance volume is saying, yeah, go along if you want to lose your money. And you're just waiting on this one. It's not ready just yet. So just have to wait and see. Right. So what you're looking at here is all these candles with a long tests, long rejections to the downside and the top side. Not really something that you'd want to really trade. That is a good one. We have a series of, I'm just put it back on. Where's it gone? There we are. Look at all those flat bottoms, really nice candles, no rejections at all. Market is immediately accepting the price and going up. Then, of course, you're going to get rejections, taking profits into this area here, indecision, and the market pushed on. These are really good signs that the market is willing to really push on. And at the moment, the pound is 5.8 against Japanese yen, which is 3.4. So the force is with you on a blended momentum, and the 9 EMA, we're trading above the 9 EMA. You wouldn't go along anyway because the unbalanced volume is down. So you're not going to be wanting to trade that. But a 5-minute fractal break out of there would be absolutely fine. If you can get the market, given as and it just has done now, a red candle here, then that's a sign of a bit of a pullback, and the next 15-minute bar long would be would be what you are going to potentially go for. We could do a fibbo on this, an expansion fibbo, to see where this market next target might run to. And you can see here the target, using this fibbo on where this market actually run, it's kind of told you that the target's probably going to be 2062, and we know that the market come very, very close to that. The 61% reach, the over trace on that is at 2641. Let's just have a look at what can we do on here. We haven't got enough information yet to know and pitch where this is going to go. Ideally, the market is really bullish, so maybe you could put an alert at the 23% fibbo. It can pull down to here, or a 38% on a bullish market, to start giving you a warning that you might be interested in trading. Or you can have that alert on that double tap reversal breaking out. But we've got all sorts of stuff here to look at. Just see if there's any fracker bots. No, still no fracker bots. We have a lot of fractal bots that we use. They're on a different screen just at the moment. I'll just pull this across on here. At the moment, I guess I need to close that one. That's for the that was for the Australian. So we've got nothing actually running. We've got 27 bots waiting to be activated in all these different markets, and we'll wait and see. Nothing yet for us to use. So we've yeah. Oh, thanks, Tony. Right. Sometimes the markets just don't get into a flow where you can get some active trades off. No, we made a few percent, but we're still waiting for this one. If you remember, cast back on here. On balance volume, look at that right on the 9 EMA. It's nothing to see. There's a 15-minute bar there, didn't break. There's a 15-minute bar there as well. But I wouldn't want to take it unless I'm going to sit and constant. Is a tip for you. If you are going to try and trade a 15-minute bar movement, the way to keep in the trade, or the way that the market can potentially tell you it's not right, is by dropping down order of 3 in time frame. So I'll just illustrate this. So there's 15-minute bar, never happened. Next 15-minute bar, okay there. So the next right, well, that would have probably worked, maybe. Let's say it didn't. No, right, okay, it probably has, but you drop that down into 5 minutes. And then what you would do is you're trading at the 15-minute level, so you're going to monitor down at the 5-minute level. And at that 5-minute level, so there's the actual, that was the trade there. You probably wouldn't have got that. You could make it so it looks like it worked, but I think the spread might have killed you. The high 65.7, you probably would have missed it by 0.3 of a pip maybe. So what you do is, if you're still pushing for that trade that you've entered, look at the 9 EMA, and that's, forget your raging hormones and your worry beads and all your, you're panicky about the trade. Your conscience and your emotions are the 9 EMA when you're trading. So you're in the trade, it's nearly made 1%. You could have snatched the profits when you saw the market reversing down here, or you use the 9 EMA to tell you when to get out. And the way you use the 9 EMA is, you can see the 9 EMA here trading is, you only get out of the market when the candles close under the 9 EMA, not the wicks, the close. So that on there, the close, on there is the close. You only get out when the market's telling you it's ready. And at the 5 minute, these are wicks, these don't count. You're in the market and you're in it until you either hit your profit target, and the profit target would not have been hit. I'm sure it would have been the law of sod. You would have missed it by 0.3 of a pip or something like that. You're in it until you get a break under the 9 EMA. And when you get that break under the 9 EMA, the market's telling you it's done. So you need to get out. So you're now heading up into here. So one of the other things you can have a look at as well is take the unbalanced volume down to a level below your monitoring stage, which is 5 minutes here. So you could say I'll take that down to, let's say, 3 minutes. And you want to keep that volume above the 9 EMA as well. So you can have a couple of ways of getting out. When the volume is trading above the 9 EMA, happy days. Or you can get out on the 9. Or you can set them both and say, well, whichever one is first. Whichever one is first. So you can see the volume coming off here. Volume is starting to come off. Momentum is coming off. So the chances are of this market making that target are not good. It's not looking good. Volume's down. You need volume to go up. You need a lot of enthusiasm in a market for it to rise. You need hardly anything for a market to come down. People get sick, they walk away, they sell the position, the bears spot it, they come in and it all goes. Everything collapses around you. Another pattern in the market that is good, while I spotted it, that we use all the time, is this pattern here. There's the top of the pattern, and this is the bottom. That is what we call a W for win, and that pattern there is usually marked on a 1-to-1 risk reward from the bottom to the top, and it just so happens it's the same target there, just about one. If you see those W's, W for win, what you do is mark it up, mark the W up, take the middle for the W down to the core, the bottom, and you go for a 1-to-1 on the W. So you kind of mark it from here to here, which is what, 3.6, and you'd measure 3.6 up here, 3.6 there, and that would be your trade. So that would be your trade there. Your market profit target from there. It's a direct break of here, which just so happens to be a 5-minute bar. That's just a coincidence. Same when you get the nth murder pattern. If you get a pattern which is like so in the marketplace, then you take a break of that pattern and you go for the depth of the trade from there to there, measured here. M for murder, W for win. Right, I'm going to stop waffling because I can sit here for days trading, and we've got a live session this afternoon where we're going to close the gap as well. Keep your eye out on gold. We need to break out of gold here, or we need a double tap to short gold. All right, guys. Well, that's this week's live stream. And what setting do you have on the OBV itself? Well, the OBV itself, I'll show you. So there we go. The OBV itself is just a straight calculation. There isn't a setting on the OBV itself. The setting comes in on the 9 EMA. So what I have is a combination of the on-balance volume and OBV. I'm going to code we call it the OBV9, and I'm going to do a video on exactly how to use it and how to trade. And it is an absolute must for anyone who is a trader. If you're not using the OBV, how the heck do you know where the volume's going? You really would, ideally, you really want to see what is happening before it actually happens, don't you? You know, most indicators people use MACDs and simple moving averages. For me, can I just can I put this back into mode, which is just me talking? Oh, there we are. Oh, there we are. I'm in. So there we go. Right. You can see me. You can see double bubble there, right? So for me, if you're trading using MACDs and simple moving averages, all that type of stuff, that's fine. You can use that. But it's akin to driving your car down the road looking in the rear view mirror. These indicators just tell you what's happened in the past. If you sit looking in the rear view mirror, it's only a matter of time before you spoil your day. What you really want to be doing is looking at your windscreen, looking at the environment, looking what's happening, and making your decision whether you brake, turn left, turn right, or accelerate. And for me, it's as simple as that. Trading is not difficult. You just need the right strategy. You got to have the discipline. You got to have the patience. You've got to be very, very consistent. And you know, all you got to do is rinse and repeat. If you have a strategy that's going to win 70%, 80% of the time, wouldn't you give someone 7 coins for them giving you 10 coins back every single day? That's what it's all about, really. I'll stop going because I can waffle on for hours, and I could do with a break. And I've got a mentoring session starting in 3 minutes time, and then we're back on live in our trading room at 2:15, and we're going to smash the American market then. So thanks for tuning in, guys, and I'll see you next week. Bye.